What's up, YouTube, and welcome to another exciting personal finance video where I'm talking about the stock market, investing, gold and silver, precious metals generally, debt and the real estate market, and all that good stuff. Guys, please help me out. Support this channel by liking this video, subscribing to my channel if you're into this stuff, and head on over to my website. Check it out, My Road to Wealth and Freedom. I throw out lots of good articles over the many years I've had that website going. Maybe it might help you out. Maybe not. I don't know. Check it out anyway. Next, guys, I just want to throw out a quick disclaimer. Guys, I am not a financial advisor by any stretch. I'm just a regular guy who invests his money, tries to do the right thing. So please consult a financial advisor. Do your own research before you do anything like buying stocks or index funds, real estate, or precious metals like gold and silver. Do your research first. Okay, guys. Wow, it's been a while since I put out a video. So much has happened, really, since the U.S. election. It's just been crazy. Trump refuses to concede, and then he does. And just last night, I heard they're initiating the transition to the Biden administration and stuff. I don't know. All politics aside, as I've been saying, it really doesn't matter who's in office, who's running the show. In the economic world, things happen, and it really doesn't matter who's president. You know, George W. Bush took over, an economy that had just been hit with the tech bubble, the bursting of the tech bubble. So the stock market was in the tubes. Um, you know, Next thing you know, 9/11 happens, and then all the chaos that went beyond that, and then the stock market started to soar, and then we had the whole subprime loan crisis, all of that stuff. Then Obama takes over, and a lot of these, the TARP relief and all that stuff that kind of filters through, and then Trump takes over, and the economy's booming. He does a couple things. They can do some things like Trump cut taxes for corporations and stuff like that. That's, of course, going to be a huge wind in the sails of the stock market for corporate profits and all that good stuff. But by and large, what I'm trying to say is it really doesn't matter. I don't want to sound negative or anything like that. Let's just say it. Since the election, the stock market has soared. Couple reasons. We got some good news on the vaccine front. At least three companies so far that, as far as I can tell, have come out and said they got vaccines that are between 70 and 95% effective. That said, there's a huge issue that, rolling out large scale vaccines is not going to be easy. There's people who may be afraid to take it. There's all kinds of stuff. So guys, I don't really want to dwell too much on all this. But for me, my issue, and a lot of other people, the stock market rallied massively on that news, which is in fact great news. But now I'm starting to see stocks trade at all-time highs, indexes hitting all-time highs. The cyclicals that were beaten down, they're starting to come back up. I noticed some bank stocks are kind of trading at or just below where they were at the start of the year. And I say to myself, is it all really that great? I don't think so. That's the thing about the stock market, right? It overreacts to the upside and it overreacts to the downside. So you don't really. I feel like this is kind of like a euphoric stage that we're in. I know there was certainly some stocks that were really beaten down, like the bank stocks, like a lot of the cyclicals, they were hard hit and they stayed down for most of the year. They did not participate in that post crash bounce that the Teslas and Zooms and all the tech stocks and gold and silver as well. But I mean, let's not kid ourselves. The economy is weak. There are sections of the economy that have really been gutted. I don't know if they're completely wiped out, never come back. Obviously not. They're probably going to come back. But it's going to take a long time. And just to kind of throw some relief on all what's happening here is the past 2 weeks you've seen Jerome Powell, the Fed chairman there, come out and say Basically, the economic recovery is going to be uneven going forward. There's some sectors of the economy that are going to take a very long time to bounce back. Hospitality, airlines, all of these things, service sector, they may not recover fully, if at all, until like 2025. So that's something to keep in mind. The other thing is it's not just Jerome Powell, the Bank of Canada deputy governor. She basically came out, and for all you Canadians out there, she basically said the same thing. You know what? I guess her point was that yes, we're going to get a recovery, but the recovery won't be as strong, won't be as robust, and if we don't do things and if we're not careful, we may not recover fully. Productivity will fall, innovation, all that good stuff, all of the economic strength will, it's just not going to come back to where it was pre-COVID, which is really, really concerning. I mean, the backdrop to all this stuff is the Western world has an aging population. The baby boomers, there were people who were genuinely hurt by what happened back in March. They panicked. They didn't want to go through another crash. They sold out. But where do they go? If you go into bonds, they're yielding like nothing, zero. Where does a retiree, which is a large proportion of the population now and growing, where does that retiree go for safety? I mean, you're not going to make anything in a savings account unless, there's a savings account that I've used sometimes in Canada. It's like the EQ Bank thing. They offer, 2.3% interest or something like that. But realistically, guys, even at that 2% interest, I mean, you're not living large off that. It's not like we're in the 1980s where you're getting, 10% interest on a savings account or 15% interest on a savings bond of some sort, government bond. You're really pushing these retirees into taking bigger and bigger risks. So they're jumping into the stock market. Maybe they're trying to do something with real estate. I'm not all that sure. But, that's concerning. You have people who are at that stage in their lives where they should not be taking very much risk at all, and they're being forced into highly risky investments. I mean, when you're retired in your 60s and 70s, and I don't think you want to be all in on the stock market, especially on a day like today where the Dow's approaching 30,000. The S&P just broke above 3,600. Even the Canadian stock market, the TSX, it's up above 17.2, 17.3, sitting in right around there. I mean, these are kind of approaching all-time highs or passing the all-time highs. You don't got to be a rocket scientist to realize that you'd never invest at the top of the cycle. Especially there's still headwinds out there. I mean, there's real damage to the economy. 25-30% of the economy is going to be in the toilet for a long time. Are we going to recover? Sure, we're all going to recover. I'm not saying that we're not. What I am saying is when I'm looking at the stock market at all-time highs, when we still got a lot of problems, even if the virus disappears tomorrow, boom, we're all magically immune to it. There are companies that have gone out of business that aren't coming back. There are people who've lost their personal business. There are family businesses that have gone out of the restaurants and stuff like that. Small business owners have been just decimated in this economy. There are people who work in the service sector and stuff. The government's kind of giving them some money and stuff, but maybe it's not enough. Maybe it's more. Maybe it's less than what they made. Well, who knows? But there are people who are in arrears on their rent, in arrears on their mortgage payment. This all has to kind of filter through the system in some way, shape, or form. My guess is that we're going to kind of start seeing this stuff show up on bank earnings statements and that, which I know the Canadian banks report this week and next. So I'm going to be looking real hard to see if their provisions for loan losses are increasing or decreasing. How's the underlying business doing? I know back in August they reported they made a lot of money playing games in the stock market, but they didn't really make that much money in their bread and butter business of personal banking and loans. That's a problem. And I saw JP Morgan and Goldman Sachs. They basically said the first quarter, their Q1's a write-off. There's a lot of headwinds. Like there's a lot of damage done, and let's not forget the huge amount of money that the governments have borrowed. They've issued bonds. They've gone on to the whole QE bandwagon. The Bank of Canada, the Bank of Australia, Bank of England, Bank of Japan. China. I saw last week there was an article. China sovereign. I don't know if it was. It must be a Chinese sovereign state-owned company defaulted on billions of dollars worth of its bonds, which were deemed by investors to be really safe because the government of China is backstopping it. Well, they defaulted on those. So, I mean, China has a huge debt bubble. And real estate worldwide has never been more expensive than it is today, November 24th, 2020. You have to say at some point, like, something's going to have to give eventually. And I mean, I don't want to be the bearer of bad news. I don't want to be all doom and gloom because I'm really not like that. Like, I am like really hopeful. Back in March when the stock market was down like 30%, I was buying some bank stocks. I was buying some energy stocks. I was buying precious metals and gold stocks and the physical metal and stuff. Like, I'm there when I see value. And I'm optimistic, that it's like maybe overdone or whatever. Even back in September, I started buying oil stocks, and just little by little, staging my buys and stuff. And they've done phenomenally well lately. For the longest time, I was just constantly losing money on them, little by little. That small incremental amount. You buy a stock, I don't know, for $20, and a month later it's at 19, and you buy a little more, and then a month later it's at 18, and you buy a little more, like. That whole thing. But now they've turned the corner and surged dramatically. My own thoughts on that, I think it's overdone. I'm happy. Hey, I've made money, at least paper profits, and I was getting concerned there before the big turnaround the last 2 weeks. But honestly, it's overdone. I'll be the first to admit that. The economies are still in lockdown. It's not getting any better. Yes, there's this vaccine thing, but it's probably, if the way we've confronted the pandemic is indicative of how we plan on rolling out a vaccine, it's going to be complete chaos. Like, you're going to have anti-vaxxers not wanting to take it, and then people who want it but can't get it. And it's just really complicated logistics and all that good stuff. So my point is, we'll get there, but it's just going to take time. Maybe by fall next year, maybe by 2022. I mean, this is going to take a long time to completely resolve itself. But I just want to move on now. I don't want to go blabbering on forever about all this stuff. Basically, my gut feeling is telling me it's probably all this stuff, the market surging and stuff like that. Yeah, it's great news, but it's probably a bit overdone. A lot of the cyclicals had bounced a little bit, except for energy, really. Banks had already bounced off their March lows. Does it warrant them trading at where they were at the beginning of 2020? I don't think so. I think it's a little bit overdone. Now, don't get me wrong. I love my dividends and passive income, and I have bank stocks, and they pay me that. But at the same time, I'm not completely convinced. So bottom line, I'm building some cash, basically. I'm not investing a whole lot right now. I reinvest my dividends and whatever. The one thing I know is gold and silver. They have had a horrible month. I remember Barrick Gold, they reported their earnings. I don't remember when, early November or something like that, or late October, and the stock it just surged. It was, I think it was, I don't know where it was, $35, 33, something like that. Now today, it's down quite a bit. It's probably down 10-15%, at least, maybe 20%. So, is that a bit overdone? Maybe. A lot of again, like, it's investor sentiment, and you can't really count on that. You can't really invest based on that because it always overshoots to the upside. in the kind of euphoria, delusional, everything's going to be peachy. This market's going to go up forever. And it always overshoots to like the downside when, oh my God, it's the end of the world. Gold's going to be worth zero. And it's just not that. But just to kind of put it in perspective, we were trading about just over 1900 a week ago, maybe 1950. Now it's down. Gold today, I see it. It's 1801. That's US dollars, of course. Silver's down quite a bit too, 2%. 23.16. Hasn't broken below that $20 mark. So that's just kind of where it's trading. I mean, that's ETFs and futures and all that stuff. The real gold and silver, like if you want to buy one of these beautiful 1 ounce gold Canadian maples, or you want to buy one of these beautiful 1 ounce 24 karat gold USA buffaloes, you are going to be paying for it, my friend. I just checked my my local coin shop, and they are almost completely sold out of those. 2 days ago, they had like 20 of these 1 ounce gold coins gone. That's the year 2020. They had about 15, any date 1 ounce coins. They're all sold out. So there are clearly people who are loading up on physical with this massive price drop. Now, I don't know. I just watched a thing last night. Some analyst was saying, gold could break 1800 and then it could go easily down to like 1700, 1650. But what I find really strange in all this is gold and silver aren't participating in this rally. But Bitcoin is surging to all-time highs. I think it broke 19,000 just today. So, I mean, if people are looking to Bitcoin as a safe haven asset and that price is still rising while gold is getting creamed, 10, 15%, it just kind of makes you wonder, like, I don't know. I don't own any Bitcoin. I did own a little bit of crypto a few years ago. I don't anymore. But yeah, to me, it's just astonishing. I'm not sure. What do you guys think about the Bitcoin versus gold debate? I see Peter Schiff. He's always trashing Bitcoin. He just wants gold and silver, mainly gold. That's your true store of wealth. Clearly, a lot of other people think so because they're loading up on the physical right now with this big price drop. Yeah, but on the flip side, I mean, you had Bitcoin was like what, $4,000 back in March. Now it's like, I don't know, what's it at, like 19,000? Like, I mean, that's a huge upside gain. I think people are on the fence about this. Let me know in the comments what you guys think. I'll be upfront. I don't know a whole lot about crypto. Like I said, I kind of dabbled in it a few years ago. I don't anymore. I don't really understand it or know much about it, so I'm not even gonna pretend. But if you guys know something, start a conversation. Let's kind of learn. Anyways, that's the other thing too. Like, where do you guys think this gold and silver train's going? Is it going to go higher? I see there's analysts and banks still putting out forecasts of, gold trading above 2,000 next year. Gold maybe hitting 2,200, 2,500. We keep hearing these things. Bank of America is like standing by its $3,000 gold target. I just saw, I don't know who put this out last night, something about gold being $5,000 in a couple years, obviously. But I think that just speaks to the fact that there's a lot of stimulus money sloshing around out there, huge debt worldwide, and people might want hard assets like gold and silver, maybe some real estate or something productive anyway. So that's it, guys. I hope you enjoyed this basic overview. If you've enjoyed this video, please help me out by liking the video, subscribing to my channel, sharing this content, and check out my website, My Road to Wealth and Freedom. The link will be in that description. And yeah, thanks so much, guys. Keep on investing.